Come on, work for me, Riverside. Work for me.
I've got you.
Okay, I can hear you now, Alec.
That's good. So Mark is, do we have a phone number for him?
Social media people need.
Okay, cool.
They need pictures.
Jean-Pierre,
Is there
Yes.
anything I need to do yet, did you?
how's it, Jean-Pierre?
Good, thanks. Can you hear me, Alec?
I can't, is Jean-Pierre?
Uh,
There we go. Oh, that's
okay.
better.
Is that better? And Justin. Hi, guys.
How's it, Jean-Pierre? How you doing?
Good, thanks.
Okay, we've got. Ooh. Okay, is that on? Off. That's off. Okay, that's off. That's off. Oops. It hasn't. This is maybe a big problem. Oh, there we go. Okay. Please don't step back. Yes. I've got my Murkiston shirt on.
No, it's not that cold today. I'm also wearing short sleeves.
He's Bishops and I'm Murkiston. I didn't get to Marisburg College. Anyway, see, close.
Jean-Pierre's look at him, looking handsome in his nice shirt.
He is.
Thank you. I could hear that in the background. Who was
Yeah,
that?
Jeanette says, you looking handsome. What's wrong with her husband? Lovely. So Mr. Joffe, isn't that nice? We'll have a chance to have a chat with him. Has his phone number changed, Brian?
It's the same one you sent me, I think. So.
Okay. All right. So we'll pick him. We'll pick him up now.
Yeah.
Okay. Thank you,
Cool. So.
Bernard. I've got his number. That's fine. Yeah. Okay. Okay. Let me close the door. Do you want to just put the phone up? Otherwise, I won't hear it. I'm sure we can get.
Hello,
Hello, Brian. It's Alec. How are you?
who's Alec? No, I don't know any Alec. I know Alec Hogg, who I once used to laugh with.
Come on, Brian. We still
Alec,
laugh. We still
You know,
laugh,
you
man.
remember you used to laugh at all those 70-year-olds. You used to say they were too old. Now
No,
you,
they were 80, Brian. It was Chipkin. He was 83 as your successor or the deputy chairman.
oh,
How are
it's
you,
not far
Brian?
different. Within 10%. I'm good, and you?
Yeah, man. Top class. Hey? And Justin says,
Where are you?
Yeah, in the studio. We about ready
South
to
Africa?
put you on. Yeah. Back. We came back 2 years ago.
Oh, I didn't know that. I thought you were still in London.
No. We were in London for a year to set up there, the offshore business. And then after a year, we were nowhere. So what we then needed to do was to get the stay for another 2 years. So after 3 years, then we were done. So then we came home. So it's been it's been an adventure. But I'm quite interested in talking a little bit about Veldskoen as well. I know it's not really big in your life, but are they doing okay?
Man.
Mm.
You can talk about it. It's a waste. I'm going to tell you that it's a waste of time to talk about it, but you can raise it. You're the boss.
Okay, all right, Brian. We have
Is it live or recorded?
Live. It's live. We go live on FMR in Cape Town through that, and then we go live via BizNewsRadio.com, which is our streaming service, and on BizNews TV on YouTube. So if we'd got you onto Riverside, but we can't bring you in the studio; it's too small. But we're soon going to have a proper studio.
I'm not in South Africa.
Oh, you're
Okay,
not in
well,
South
I'm not in
Africa.
South-
Oh, okay. Well, we couldn't get you in the studio anyway then.
Not today. No.
Not today. Great. All right. So we've got Jean-Pierre Verster as our guest co-host. Jean-Pierre, can you hear Brian?
Yes, I could. Good afternoon, Brian.
Hi, how you doing?
Good, thanks.
And Justin's here as well. And we're now going to, what we do is we give FMR a little bit of advance warning, about 20 seconds or so. And we're going to do that now. We're going to cross to them now. So let's go.
Stand by. Business Power Hour starts in 25 seconds. Fifteen seconds. 10 seconds.
The BizNews Power Hour.
Welcome to the BizNews Power Hour, where we give you the rational perspective on business news that matters. Indeed, we do. And tonight we have got a very special lineup for you. Brian Joffe, legendary entrepreneur here in South Africa, the chief executive of Long for Life, a company that he started a few years ago, 2017, listed it. Hasn't gone the way that we all expected. We'll find out if Brian has got new plans now. He did appoint his old friends from Investec to have a look at the corporate structure. We'll find out if they've come up with any ideas. There's been huge share buybacks in the past couple of years. That's coming up in really just a moment. After Brian, we'll be talking to Bernard Mostert, it is, the former Tekkie Town chief executive, the man who issued court papers yesterday to get Steinhoff put into liquidation. And then after the news and the market report at 6 o'clock, Chris Wheeler, the chief executive of PostNet, on that ridiculous, for many of us, idea that the post office is going to get a monopoly on delivery of all parcels of under 1 kilogram. Now, we know the post office is, not exactly the hive of efficiency. How are they going to destroy a 20 billion rand sector on the grounds of old laws, which used to give the post office a monopoly? One only knows. But all of that coming up with our guest co-host tonight, the one, the only Jean-Pierre Verster. Jean-Pierre, lovely having you on the show again. Brian Joffe, I know you've been a fund manager, money manager for some time. What's your, if I were to throw the name Brian Joffe at you, what comes back?
Well, the first thing I think of is more Roffe for Joffe, more return on funds employed. I think he's a bit of a legend in the industry, given where he took Bidvest from to where it ended before he parted ways with the company. And having a second life with Long for Life. So we'll chat to him a bit later. It's been difficult for, I think, most investment holding companies, but Brian Joffe definitely has the skills to allocate capital very efficiently and very profitably, as he's done in the past in his career.
That Roffe for Joffe. Brian, good to have you on the program. It's something that we used to hear a lot about at Bidvest. Motivate all of the divisions to ensure that they got their return of fund employed above the number that you set for them. However, when we look at Long for Life, your new company, the second life, as Jean-Pierre said a moment ago, see in the past financial year, Roffe for Joffe went down from 38% to 27%. We've had COVID. That's probably a big part of it.
Well, I mean, Roffe for Joffe is a very, very important yardstick for us managing our businesses. And you're right that the calculation on if you use the whole year as your number, of course, you're going to get to that number. But there are two component pieces to that. One is the actual funds employed themselves, which we did a brilliant job on during this particular period. We generated about 200 million rands worth of cash, which is almost 10% of the market cap out of working capital. And then the other component piece, of course, is the trading profit, which was significantly down because of the first 6 months. So if you do the calculation based on the first half of the pre-COVID and the second half of this financial year, you're going to get a significantly different number.
Yeah, I saw that your cash flow statement. I couldn't actually believe it. I had to rub my eyes to see how strong it was. How did you achieve that, Brian?
Well, I mean, you could, I suppose, come to the conclusion that we were very inefficient before that, and that's how we managed to do it. But please don't do that, because that's not what happened.
I doubt
I
that a
think
Joffe
that's-
company would ever be inefficient. I think we know you better than that. But is there any tip you can pass on to the rest of us who are trying to get cash flows a little bit more aggressive, particularly in these difficult times?
I think the one important factor in managing funds employed is that it's very difficult to do it if you don't have the right mix. And so it's one thing to be overstocked. The other is to be overstocked with the wrong products. And I think fortunately for us, we've done a lot of work over the 2 or 3 years that we've owned the business in making sure that that the stock mix was good. And then, of course, the nature of the business also changed a little bit, and that gave us the opportunity to reduce on a sustainable basis the funds employed in that particular business. That's in the sport and recreational field. And we also had some big wins in the beverage business where we stepped up our efficiencies, which were some degree forced upon us by COVID. So yeah, I think we did a good job in that space.
When you listed in 2017, I recall you putting 100 million rand of your own money into the business, and you've just broken square on that at the current share price. I suppose you could have done better by putting it in the bank. It couldn't have been what you anticipated back then.
No, no, Alex. I mean, of course, I think I'm probably into a small profit at this point in time, but I haven't really looked for a long time. The issue at the end of the day for me, it's not a one-day game. And if I was a seller, then of course the share price is important. But if I was a buyer or a holder, the share prices are really less relevant. It's maybe better for the share price to be off. But having said that, I think the real issue for me is that I think that we've done over the 2 or 3 years or 3 years that we've had the business, I think we've done a particularly good job in managing the businesses. Each one of the businesses, in my view, are better now than they were when we acquired them. And I think that each one of them has got better growth potential now than what they had at the time that we acquired them too. So from that point of view, we've done well. I think where we've fallen short, and it's really to some degree not necessarily in our hands, is that the share price doesn't reflect in any shape or form the underlying value of the business. And then you can see that we've got a business which has basically got 600 million rands worth of cash after buying back over the years, 1 billion rands worth of shares. So there are 30% less shares in issue from the day that we started. And that, for the purpose of computing what value is being created, that's been significant for shareholders. But having said that, that's the exercise for us is not that. The exercise for us is how do we create a structure so that we can continue to find some methodology to grow in going forward. You can't, 800 or 600 million is not really a significant amount of money for deal making, and especially if you're trading at a 40 or 50% discount to what we think the businesses are worth. So we can't use the equity to do deals. It's too dilutive. And secondly, I think that in trying to do mergers, what we're finding is that there are people who are more interested in focused activities of what we've got rather than the general parcel. So we're looking at various of those alternatives, and we're looking at seeing whether they are any better than what we've currently got. And who knows, at the end of the day, within the next 2 or 3 weeks, we'll basically know where we're going. Who knows, we'll either stay as we are or make some changes.
Brian, if it makes you sleep any better, Alec goes to Sorbet Man every few weeks, so he really is contributing to the bottom line there. But secondly, why are you outsourcing your corporate finance work when you've probably got a better track record and expertise than the whole Investec team put together?
Well, let me put it to you this way. If I was a doctor, and I was a good doctor, I would still not do an examination of myself. I would go to somebody else because I think at some point in time, you need to get some outside view of life as well. I have certain preferences as to where I would like to go, but of course, it's not only my decision. Whatever happens at the end is going to be the decision of the shareholders. We can only recommend if the shareholders want to stay as we are and bat on, then of course that's what's going to happen. If they want to make some changes, then of course that can happen too.
And you say that's going to happen in the next couple of weeks, Brian? That you'll get advice from Investec on what to do.
Look, the process is already underway. So it's not like we're starting from today. We started about 2-3 weeks ago, and my guesstimation is that in another 2 or 3 weeks we should know, in principle, which way we want to go. Obviously the implementation will take a lot longer than that, but if there is any implementation. And so, yeah.
Sean?
What I don't like to do is, I think from a public company perspective, I don't think it's good for us to be in hiatus and not know where we're going.
Jean-Pierre?
Yes, I think as Brian has correctly said, there shouldn't be too long a hiatus. And when the cautionary came out a few weeks ago saying that Long for Life have approached Investec to do a review, there was concern that this might be the end of Long for Life, because we've seen a lot of investment holding companies persistently trade at a steep discount to intrinsic value. So it was a bit of a relief after this morning when Brian clarified that it doesn't necessarily mean that the whole Long for Life is not going to exist anymore, but there's some corporate action that could be regarding some parts of it. So Brian, very glad to hear you'll still be continuing. I know you're not a big fan of traveling, or at least not air travel, but you are traveling internationally these days. If you don't mind me asking, how are you getting around these days, Brian?
Well, as we talk to each other, I'm happy or sad to tell you I'm actually in Tel Aviv facing the bombs.
Oh, wow.
But having said that, that's only not really serious. I get around. At the end of the day, you get around. I'm one of the fortunate ones that have been vaccinated here. And so I get around.
Just getting back to South Africa and another issue of COVID, I've noticed from my own golf club that golf has suddenly taken off. We've now got record number of new members. And whereas the golf club was struggling to get people on their books before COVID, now they've actually closed off membership. Now you you're in that business through Sportsman's Warehouse, and I see you've just bought Direct Leisure Golf Distributors. Are you seeing that as well, that particular sport? I know you did mention in your results that home gyms are going up, and I suppose that tells us again we must buy a Peloton, and that cycling is also booming, but golf?
Well, golf, I think the name of leisure golf is a bit misleading. It really doesn't do much golf, and golf is not a big sport amongst us.
Okay, but it's they
do other things. They put it in basketball and cricket and the like. So yeah. Look, I think from my perspective, people are not moving around a lot. They're staying at home. And they have to entertain themselves in some form of leisure. And Sportsman's Warehouse, Outdoor Warehouse are doing particularly well at the moment, as is it to some degree Sorbet. And as I try to say to people, Sorbet's still got constraints of capacity. It's not that COVID has gone away. We still have got social distancing as a factor, and we still have limited capacity relative to where we were in the past. But so I think that the businesses that we have, all of them, in fact, are doing particularly well, and I think are in a space at the moment which is good for their businesses. Now, whether that's going to be the new norm going forward, and whether life gets to normal, people start to travel again, and people join gyms, and the lifestyle goes back to where it was. That's possible. I don't think that's the real world. I think there's some permanent change in some of the markets. And I think that some of the things that we've done, have been particularly well thought out.
We're looking at investment holding companies and discounts a lot at the moment. And from your company's perspective, when we see your net asset value of R7, your current share price of R4.60, that's a discount of about a third. Where do you feel that Long for Life's discount should be, or is that NAV just so undervalued that it could actually go much higher than the current discount of about 34%? I worked out.
Look, one thing I've learned not to do is to deal with the share price. The share price is not determined by me, unfortunately. Otherwise, I would know what to do. And the issue at the end of the day is it is what it is, and there is a discount to holding companies, whether one likes it or not. I think the real issue for us, or the challenge for us, is how do we find a structure that enables us to grow with some equity issues along the way? Because we can't issue the shares in a transaction because of the significant discount to the underlying value. Whether it's R6, R7, R8, whatever it is, I don't know, but it is significant. So we need to try and find some kind of a methodology by which we can more clearly focus what we're doing so that we can maybe potentially merge with others on a relative basis in order to create some scale in order to be able to advance it to another level of growth. And that's what I'm trying to establish in our mind how one could get there. I'm not saying that it's possible to do because unfortunately, as you said right in the beginning, this is a small cap business. And it's not really the flavor of the month being a South African small cap business.
You've got 21 million shares. Colin Datner, your other executive's got 5.5 million shares. So shareholders know you heavily invested in the business as well. Brian, just to close off with the...
I've got 29 million shares.
29? Well, you must update your annual report then. It says 21 million indirect. I didn't add the direct shares. Of course, your annual report wouldn't be wrong. More like my reading of it.
Alex, you never make a mistake.
Brian, looking back at Bidvest and in particular Courier, which was a company that I know you took quite an interest in from the Bidvest perspective, how are you seeing what happened there? Because it's Bidvest, I suppose, not so bad, but Courier, to see that business collapse primarily because of COVID, would have made a lot of people sad, but you perhaps one of the major ones.
Look, it's always sad to see something not being successful. I mean, I presume, look, I'm not really all that close to it to be able to give an informed view of what really did happen. But I think it was a combination of management, a combination of COVID, a combination of the market itself. I mean, South Africa, if you take, for example, SAA, I mean, SAA was the backbone against how others measured themselves. And an inefficient SAA and giving away tickets at half price doesn't augur well for the market as a whole. So, I mean, at the end of the day, they both came to the same unfortunate end.
Brian Joffe, the founder and chief executive of Long for Life. Jean-Pierre, before we pick up with Bernard Mostert on the story that's been making headlines all over the place today, would you be buying Long for Life shares at the current price, around 450, 460?
Well, I have been a buyer the last month, Alex. A full disclosure, we do own Long for Life in the hedge funds under my management. We're optimistic about this value unlock that Brian is embarking upon. At the current price, you can probably still buy some. It depends on the terms of the deal when it is finally announced. But as Brian says, that will come out in the next 2 to 3 weeks. So yes, definitely at a discount to NAV, it looks reasonable.
So did you start buying when the announcement came out that Investec were looking?
Correct. That, in my mind, was a catalyst. And if you just looked at it, the price versus the NAV, any catalyst will bring you closer to NAV. So it was sort of a no-brainer to say when they issued that cautionary that one should be buying Long for Life shares, and the shares have done quite nicely since.
And you were paying a lot of attention this morning in the presentation, Justin.
Yeah, Brian Joffe's 100th presentation to shareholders, the first I've ever attended.
Were you impressed?
Very impressed. It was an occasion. But Jean-Pierre, I'm just interested to hear. So you said when corporate action comes like this, especially for these investment holding structures, we've seen a hell of a lot of corporate action with Naspers, and things have turned the other way. I understand that also could be part that the market has just gone sideways or backwards at a rate, and not the last few days.
Well, when you get corporate action, it doesn't always mean a positive thing, and I think that's really what we were talking about a little earlier. In that the feedback we got from Piet Viljoen last night about Naspers was decidedly unpositive, and we're seeing a lot of the analysts saying the same kind of thing.
Yes, and I was on the call with Naspers management yesterday, and I have a follow-up call with Naspers next week, Tuesday, because I also have some concerns, and specifically regarding the fact that the ratio they're offering of 2.27 is not the right ratio. It doesn't really, it's not in my mind a fair ratio if you look at the underlying value of a Naspers shareholder versus the underlying value that a Prosus shareholder holds. And we'll need to wait and see if that gets adjusted or not. The problem you have is there's a control structure, so shareholders actually can't say anything about this. And this deal is not coming to be voted in front of Naspers shareholders in any case. It's a deal that Prosus shareholders will vote on. So it's a little bit of a hot potato, I think, currently for the Naspers management. They probably expected a lot of positive reaction. And from Prosus shareholders, I think it is positive, but from Naspers shareholders, it's less so. So they're probably scratching their heads on the back of it.
And they're the ones who've got to tender the shares. You know, Justin, if only Jean-Pierre was in on that media call, you would have made it a very different conversation. Everybody was quite upbeat and on the telecon yesterday. And Bob van Dijk was extremely buoyant when we asked them that the conditionality there was 45.4%, I think they've got to get of the Naspers shares being tendered. There was no doubt in their minds that they were going to get it all. It wasn't because you could tender 100% if you wanted to, and it's a no-brainer. Well, I thought it was a no-brainer until I started listening to people who are far better informed than I am. And it just shows, Justin, you know, we do doff our caps and defer to the experts, Jean-Pierre.
I think as a final point, Alec, I do expect that the deal will go through, because the moment you set something like this up, you create effectively a game, and you have arbitrage funds that would go out and buy Naspers again on the announcement of a corporate action, and they know they can swap their Naspers shares for 2.27 Prosus shares, and that will probably lead to a high acceptance and that the deal is successful. I just think that after this deal, Naspers shareholders are in a less good position, because the Prosus management have indicated this is the last step and this is a sustainable solution. Well, I believe actually more should be done to unlock the discount.
It's interesting, also in the conversation with Bob van Dijk yesterday, he said they've got $5 billion to make sure that those ratios stay the way they want them to. We'll be picking up in just a moment with the Steinhoff story. You're listening to the BizNews Power Hour, brought to you by the team at biznews.com. Bernard Mostert is the former chief executive of Tekkie Town. In the news this morning, after there were court papers lodged yesterday for the liquidation of Steinhoff, I read through the court papers. You'll be pleased to know, proud of me that I did that, Bernard, because it was quite a job. Your affidavit is lengthy, detailed, but quite explicit in that you guys believe you were conned, and there's very little reason to believe otherwise, given that you sold Tekkie Town for Steinhoff shares just before Steinhoff imploded. And you say that if there is the settlement that Steinhoff is trying to negotiate in Europe, then you're going to be out of pocket. You've lost your business. You're going to be sitting with something worth about 5% of the true value. So I can understand why you're angry, but what are the chances of success here?
Alec, I think that if we measured our lives and the actions that we know is going to be successful, probably we're not reaching our full potential, you know. So it's not about whether it is the right thing to do, because it absolutely is the right thing to do, you know, and it's easy to get lost in the wash of why we're doing it. But the reality is that the proposal as it stands by Steinhoff is not a good outcome for South Africa. It's not a good outcome for the vast majority of creditors of Steinhoff. And we believe that there are certain fundamental flaws within the Steinhoff settlement proposal that can be addressed quite sufficiently by South African authorities and a South African liquidator.
So a little bit of a recap on the Tekkie Town story. You guys were approached by Steinhoff. You had a great business. They bought it for 3.25 billion rand. 3.25 billion rand, not million. So it's big bucks. It was then you received Steinhoff shares in return for that 3.25 billion rand. Why didn't you insist on getting cash?
I think it's very simple. And the reason is as follows. So allow me to construct it for you very briefly. We sat on a very fast-growing, highly cash-generative, zero-debt business in Tekkie Town. We believe at that stage that we understood that market particularly well. Let's call it a third-party supplier market where you stock brands, etc. And we also understood what the likely market saturation is for the Tekkie Town business. Within the Steinhoff stable was a business called Pepkor Speciality, comprised of Shoe City, Duns, Refinery, etc. And that business had struggled for many, many years. Shoe City moved to what was then Pepkor in 1984. That business had lost a lot of money. There was about 500 business in that stable. So our founder, Bram van Heestien, discussed it with me and said, we can turn this business around because we understand that space. We don't understand the white label space. We don't understand the Pep store space and the Ackerman space, but we understand this space. And those 500 stores are not optimized. So we're going to put our business into Steinhoff. It's then going to be merged with Pepkor Speciality. We will take control of Pepkor Speciality. We'll have 800 stores. And then we're going to do something that we've always said to one another. Let's prove to our stakeholders that we can deliver. And as a result, we agreed to a 3-year lockup for the value that we supposedly got in return for our business. So that is how our deal was constructed. And frankly, if it was about money for us, and I don't say it flippantly, surely we would have taken money at the time, but we took none. So
I could see. I think that kind of explains it a lot better. There was an opportunity for you to go and fix something that wasn't being well run. You knew how to do it. So it made a lot of sense. But on the other side, the paper that you were given, as you explain in your affidavit in some detail, was inflated beyond comprehension because of fraud.
Yeah, sure. By Steinhoff's own admission, so Steinhoff, and I think that's a big part of our distrust in the process as it stands right now, is that even after the events when Steinhoff vowed to clear the books and come out and be sure that justice is brought to book, there's been a lot of events that's been contradictory. At first, they said the financial statements will be restated within 6 weeks. The PwC report then took almost 15 months. Then all of a sudden, it wasn't Steinhoff that commissioned the PwC report. It was the attorneys in the contemplation of litigation. That report is now sealed. No one can get access to it. And in a liquidation where you have a Section 417 inquiry, very much like the Zondo Commission, not to be grandiose, somebody can really get to the bottom of what happened here, and critically also ensure that the relevant prosecution happens.
So if we had a Zondo commission on Steinhoff, which probably would be a good idea, thinking about the hundreds of billions of rands that have been lost by retirees in South Africa, they could force that PwC report into the open, and it could make a huge difference to understanding exactly what's going on. From your perspective, though, given that you can't get your hands on that report, are you then hoping to force that issue when you go to court?
Well, there's a few other people that have tried to force that issue, and they've been unsuccessful. And the most ironic of all of them is that Marcus Jooste is suing for that report, and they're denying him access to it. And arguably, if he's going to have a chance to defend himself and not just be guilty in the public court or the court of public opinion, then he must have access to it to defend himself. So we believe that report needs to come out, and critically, we believe that no settlement of any kind can be made until we actually understood what happened. Because as we sit right now, we sit with qualified financial statements that Mazars is not happy to give an unaudited, unqualified report. The shareholders are rejecting the statements, and we are no closer to actually understanding what happened, and no one has been prosecuted.
Can you stop the settlement deal of Steinhoff going ahead?
Listen, I think to some degree, our action is a step to make sure that we've put a stake in the ground that we can continue with our litigation. Because what we really want is we want our day in court. And if you work in very fine detail through the legalese of the settlement proposal, it says inter alia that if you accept the settlement, you forego any right to litigation against Steinhoff and any Steinhoff group company going forward. Now, our case is against Steinhoff and against Pepco, who was a 100% subsidiary of Steinhoff on the day that they got Tekkie Town, and we have successfully joined them in our restitution case. So, do we want to simply put a spanner in the works? No. We want to march towards our day in court. And I think if we have our day in court, it will be a better outcome for a few other claimants, and also at least address this stain, no pun intended, that's sitting on corporate South Africa.
I'm a little bemused by the comment you made a moment ago about Marcus Jooste defending himself by getting hold of the report. Is the evidence, in your mind, not overwhelming that there was wide-scale fraud here?
It seems so, right? But we don't know, because the report sits behind a blanket of that is protected by Steinhoff. The only people that can enable the effective prosecution of whomever was responsible for this, and they've already identified Marcus as one of those individuals, is in the hands of Steinhoff. And it could come out through a Section 417 inquiry. But I don't think any of us on this call, or anyone likely to listen, would ever want to be in a forum where you are accused of something and you can't defend yourself.
But it seems, well, it's pretty well known from the German authorities and everybody else that there was a crooked audit firm in Germany that was creating all these fictitious invoices. And that's why I don't understand why the PwC report is going to perhaps contravene that, do you think?
I think the PwC report might show us a lot of more things that we don't know. So I'm very interested in that. So I'm not in any way suggesting that there wasn't fraud. Certainly there was fraud. The company has already admitted it. The company has identified at least 6 or 7 individuals that participated in that, and we almost had a full house. We had 4 out of the 7 that was involved in our transaction. So it is but it is a process, and I think that it stands to reason that it must be heard. And if you look at the settlement proposal as it stands right now, I genuinely fear that there ultimately may be no prosecution in South Africa at all.
But just to close off, because there's lots of talk in the racing industry, which I think I have a deep pedigree in, and so does your partner, your chairman, Bram van Heestien, that Bram and Marcus Jooste see each other regularly. In fact, that they spend at least one weekend a month together. That's the story that comes back to us within the racing industry. And I know there's a lot of gossip, but if anybody knew whether this was the reality, you would.
Yes, yeah, Alex. So that is that's not untrue. Bram does speak to Marcus. I speak to Marcus. I speak to Ben Lagranci from time to time. And I guess the next question is why. And it's a sensitive point for me, because it goes to my Christian faith, and I know that people are very often criticized for that, but I'm not, and neither is Bram, and neither is anyone in our team. And we look at that, and you say, if you had to be full of hatred and full of bitterness, where does it end? Do I now become bitter at the hedge funds who's going to recover 100 cents in the rand on debt that they bought for 10 cents? Am I bitter towards Marcus, etc.? 2 days after the events, Marcus went to Bram. He apologized to him. He looked him in the eye. He said, I've done something to you that I could arguably never reverse. I'm sorry, and you could never forgive me. And Bram said, the book that I live by says 70 times 7, but it does not mean that I don't want justice. So I'm going to pursue my case. And that's the story. And that's how we feel about all individuals here, So again, don't want to sound grandiose, but we judge the act, not the human being. And Marcus did apologize to Bram. He apologized to me. He apologized to a few others within us, and so did others within the Steinhoff stable. So it is at certain ways it's being used in a Bell Pottinger way, as there must have been some form of collusion. But I must say there's no version in which you give your 3.2 billion rand business that makes 300 million rand cash a year away, get nothing in return, and then somehow you benefited from it. It's laughable to think about it. We find with the character point that we talk to everybody. We're not against that.
Yeah, it's a little bit like suggesting that Christo Wiese knew what was going on and then geared up to lose 60 billion or whatever the number was. Jean-Pierre Verster, I'm sure you've, before we let Bernard go, you've got a thought or two?
Yes, this is a fascinating situation and a fascinating saga. It's not going to end soon. But the one thing that I find interesting, Bernard, is that Steinhoff, the new Steinhoff, today's Steinhoff, and the Steinhoff whose shares you got, is a Netherlands company. But it does have its head office in South Africa. It is tax domicile in South Africa. So it's interesting that your application is to a Netherlands company to try and liquidate them in terms of South African jurisdiction. Can you maybe touch on that?
Yes, John. It's a very good question, and I must say I anticipated it. So I want to point out that the contract that we entered into in 2016 was a Steinhoff NV, and that contract stipulates quite clearly that our contract will be governed by South African law. The jurisdiction will be South Africa, and any arbitration or processes that will follow from that will be heard in South Africa. So Steinhoff's contention that it's a Netherlands company, I think we lay it out pretty clear in our papers. Louis de Preer lives in the Western Cape. Theo de Klerk lives in the Western Cape, both long-time Steinhoff men in different forms. Steinhoff's registered address is in Stellenbosch. All the books that have been written about the Stellenbosch Mafia and Steinhoff, etc., doesn't refer to Steinhoff being Netherlands-based. It refers to Steinhoff being a Stellenbosch company. So I guess a South African crime deserves a South African court, right?
Agreed.
And
that's why this is so, just to add, and that's why this is so complex, because if you think about Steinhoff, the majority of the debt today is offshore in Europe, as you say, Bernard, held by hedge funds and Conservatorium and all these other groups. But the majority of the assets are still in South Africa. You have Pepco that is going to be listed in Poland if everything goes according to plan in the next month, but that is dwarfed by the debt. Well, the actual value is the Pepco business listed in South Africa, and that is why it's so difficult. One almost wants to unscramble the egg to go back to before Steinhoff externalized and became, in legal terms, a Netherlands company. But that's so difficult to unscramble an egg.
Yeah, Jean-Pierre, if I can comment on that, if you look at it, and I had ironically a conversation this afternoon with another litigant, and you look at the South African entrepreneurs that are now being crammed down. Christo Wiese, 18 cents in the rand. GT Ferreira, 29 cents in the rand. Bram van Eysten, 5 cents in the rand. All men who made their money in South Africa, invested industrially in South Africa, created a lot of jobs. Bram started with 20,000 rand, never borrowed a cent, built up a business of 3.2 billion rand and employed more than 3,500 people. He's getting 5 cents now, effectively being denied the opportunity to continue to reinvest in the country. Same for Christo. At the age of 79 or 80, I feel very deeply for him because he perhaps doesn't have the timeline. I'm not criticizing him, but he doesn't have the timeline to do the recovery that we are pursuing. GT's claim was an investment that he had made for his farm workers. They're losing 70 cents. Jayendra Naidu's claim, 50% owned by the PIC. Is it fair that financial creditors who obtained the debt that they now hold, which was generated based on fraudulent assets, that they recover 100 cents in the rand plus 10% interest, which is kind of rich for Europe, if in some cases they paid as little as 10 cents on the coupon, So it's an interesting.
No, that's perspective. And Steinhoff issued a statement today to say that they will be defending this vigorously, but it is a bunch of lawyers now running the place. So I guess one had to understand that. Just before you go, Bernard, there is a question on our YouTube live chat from Andre Boer, who says, this is for Jean-Pierre actually, he says, I assume the esteemed Jean-Pierre Verster was not a fan of Steinhoff before all the bad news emerged. Okay, put him out of his misery. Tell him about your short position.
Yes, no, I looked at the books and we found the off-balance sheet entities via the equivalent of Cipro in Switzerland and Austria, which is the Campion group. And because of that, we had concerns. We put those concerns to Steinhoff management. We weren't happy with the answers, and we shorted the shares in advance of the big fall. So the timing of the fall came as a surprise to me personally. I thought it would take still a while. But at the end of the day, we were very concerned about Steinhoff, and that's why we were short, and we made money for our investors by being short Steinhoff.
Jean-Pierre Verster, who's our guest co-host tonight, and Bernard Mostert, really good to be talking with you. Thanks for sharing as openly as you have this evening. And now I guess it's time for us to catch up on our 6 o'clock news bulletin. And Justin, we're a little late for that, 10 minutes, but I think it was worth it.
Nothing wrong with that, Alec.
And our editor-at-large, Jackie Cameron, has the flash briefing.
South African-American biotech billionaire Patrick Soon-Shiong has committed an initial 3 billion rand to help build out South Africa's capabilities to produce COVID-19 vaccines. During an online World Health Organization meeting this week, Soon-Shiong said his company would bring its technologies and expertise to South Africa to enable vaccine production capabilities. Soon-Shiong is the inventor of Abraxane, a drug which is highly regarded for its efficacy in the treatment of breast cancer. He was born in Port Elizabeth and obtained his bachelor's degree in medicine from the University of Witwatersrand before moving to North America, where he has built multiple successful pharmaceutical and healthcare companies. South Africa's Department of Health says that while COVID-19 infections climbed 46% in the last week, the country has not yet reached its resurgence threshold. Cases are rising fastest in the Northern Cape and Gauteng. The South African Medical Research Council has produced a report into excess deaths over the past year, suggesting that more than 133,000 South Africans have died from COVID-19. This is far more than the official tally of nearly 55,000. South Africa's ABSA expects a tenfold profit jump for the 6 months to June the 30th, it said this week, citing cost controls and reduced bad debts. South Africa's biggest food producer, Tiger Brands, also expects half-year profits to rise by up to 55% versus a year earlier. Facebook has been called to appear before South Africa's parliament this month to explain what it is doing about harmful misinformation spreading on its platform. Opposition MP Phumzile van Dam says Facebook will appear before the Communications and Digital Technologies Committee on the 25th of May as the country inches towards the 2021 local government election. That was your BizNews Flash Briefing. I'm Jackie Cameron for BizNews. For more on those and the other big stories of the day, do visit biznewsradio.com.
BrightRock believes that with every change in life comes opportunity, and the markets aren't any different. The daily movements in the markets mean change for us all, sometimes small, sometimes big. This daily market report is made just for you by BrightRock, the first ever needs-matched life insurance that changes as your life changes. Here's Justin.
The JSE All Share Index was a bloodbath today, close to 2% lower at 66,200. Naspers was down 3.5% to just over 3,000 Rand a share. The share is now down on a rolling 12-month basis. Tiger Brands up 4.5% to 216 Rand on the back of an upbeat trading statement. And Sibanye-Stillwater down 3% to 63 Rand a share. In the currency markets, the Rand was slightly weaker against all the major currencies to 14 Rand and 10 cents to the dollar, 19 Rand and 80 cents to the pound, and 17 Rand and 2 cents to the euro. Gold is steady at $1,824 an ounce. Brent crude is low at $67.80 a barrel. And the premier cryptocurrency will put you back 700,000 Rand a Bitcoin.
And this thought leadership feature was made just for you by BrightRock, the first ever needs-matched life insurance that changes as your life changes. You're listening to the BizNews Power Hour, brought to you by the team at biznews.com. Yeah, Justin, it's hard to find something that went up today. As you mentioned, Tiger Brands was, well, that's on a trading statement. Dis-Chem, Motors, Barlow World. Outside of that, you struggling. On the other hand, just the red ink is everywhere.
I do see the US markets are in the green currently, so hopefully it'll be a bit of an uptick tomorrow morning.
Jean-Pierre, we don't have to worry too much. If there's going to be an uptick in the US, it should come through to us.
Yes, it should, depending on the currency, Alec. I mean, the currency has also been a bit of a curveball the last week or two, first strengthening a lot, and then in the last 2 days, weakening a lot again. So as always, the shorter movements of markets are keeping one on your toes.
Well, we will be talking about something else that's kind of confusing everybody. But first, at BrightRock, we believe that change can unlock amazing opportunities. We've partnered with industry leaders to provide you with tips and tools to help you navigate life's big change moments. Welcome to this week's Thought Leadership feature, made just for you by BrightRock, the first ever needs-matched life insurance that changes as your life changes. And if the South African Post Office has its way, something big is going to be changing for us. A 20 billion rand industry is going to go, well, I guess implode, because the post office wants to stop anybody else delivering packages under 1 kilogram in size. Chris Wheeler is the chief executive of PostNet. Chris, this isn't something new. It's been going on for quite some time. How does the law stand? Before we get into the emotional side, which I'm sure is very emotional for you, but how does the law stand on this whole parcel, 1 kilogram parcel story?
Well, good evening, Alec, Justin, Jean-Pierre. I think, Alec, thanks for the opportunity. I think first things first, yeah, emotional side. Please remember, I'm not the lawyer. But it's quite simple. PostNet as an organisation and, thankfully, the South African Express Parcel Association are all of the same opinion. We do not believe, when we read and understand the Postal Act, that we have the same understanding as what ICASA and SAPO do. So our understanding and interpretation of the Act is very different to what they believe the Act reads.
And your understanding?
Our understanding is, from a business model point of view, the Postal Act, which was written many, many years ago, is related to postal services. We offer a courier service. We don't offer a postal service. A courier service is very simple. It's time sensitive. You've got track and trace. We're about efficiency and being fast. If you look at a postal service, which is a stamp, which is an envelope, is two totally different products. So our understanding and interpretation of the Postal Act is very different.
How big is the courier service for parcels or packages under 1 kilogram?
It's a substantial amount of volume across the whole industry. I think you made a statement there that the industry is worth 20 billion. A fair size amount of that business is obviously items that weigh under 1 kilo. And I think that's a big point to remember, Alec. It's just not PostNet. And if I do go into a bit of history, our business we started in 1994. So we've been trading for 27 years. We've got 412 retail outlets, all individually owned and operated. There's many other businesses, good businesses, that do exactly the same as PostNet. The courier industry is a large business in South Africa. We're talking a 20 billion rand industry. So it's a fair amount of parcels, I'm sure. And it doesn't only affect our business, it's across a whole host of other businesses, whether it's education, whether it's e-commerce, whether it's the person, the man in the street that deserves choice, sending a parcel or going on holiday and leaving a set of keys and a jacket and they want to send it back home. It's all about convenience. It's all about courier. So, yeah, the Postal Act, we don't believe in the interpretation of the Postal Act, and that's why, unfortunately, we're in court to protect our livelihoods.
When does the court case happen? Given that this does go back to, well, 2018 initially, is this the final court case, or when is it? And should you lose, what would you do?
Alec, I must be careful because I run PostNet. I'm not the legal team.
Okay.
Let me update all the viewers. We started in 1994, and we've had a very strong, good working relationship with the South African Post Office in the early days. We've always engaged with them. We've always spoken about collaboration. Let's work together. The legal issues with the South African Post Office started in 1997. So that's quite a few years ago. And then what normally happens, business things change. I fully understand that. They always, got to improve. So about 4 or 5 years ago, this came back on the table. And I must also say this, the South African Parcels, a very well-run organization, have always been very proactive. They've even engaged with the minister over many, many years. So yeah, unfortunately, it raised its ugly head probably about 3 or 4 years ago. And obviously we defended it, as we've always done. And then, a couple of hearings, good communication, and out of the blue, through the CCC, they made a decision and they gave us the deceased order to stop trading. That forced us to go to court and get the urgent interdict, which thankfully we won, and it's still in place. And as of today, a court date hasn't been set. Alec, there's no communication, there's no court date. So we wait and see. We wait and see.
But 3 to 4 years ago, Mark Barnes would have still been running the post office, or not?
Yes, he would have. He would have. Mr. Barnes would have. Mr. Barnes was the CEO of the South African Post Office. Yes. Yes.
Justice Malala in this week's Financial Mail, before I turn over to Jean-Pierre Verster and Justin, who I'm sure have also got questions here, he writes, and it's really worth repeating. My experience of the post office is that your parcel will be ripped open, the contents stolen, the empty package delivered to the wrong address, and you will spend months at one of its branches paging through a tattered logbook trying to identify your package. And I don't know if Justice is exaggerating for effect, but my goodness, that is a view that is felt by many. Jean-Pierre, what are you making of all of this?
No, I agree with Justice Malala. I mean, the one piece of documentation that I still get via the post office is magazines that I had subscribed to a long time ago, and I get about every second month's magazine. They don't all arrive, and I'm a big fan of PostNet. I'm a big fan of the fact that it's not a universal service. You can't send something via PostNet absolutely anywhere. And in my mind, therefore, it doesn't compete with the post office. But I have comfort when I go to PostNet because it's a private endeavor. I know that my car keys or my ASPA pump or my documents that I have to sign and the regionals need to get to somewhere else, and they really need to get to the other party to countersign. I'm not going to risk that with the post office. So we've seen what has happened with other semi-government institutions. And the post office, unfortunately, is not functioning correctly and at the right level. So to now try and inhibit private industry to deliver a service that the post office can't deliver it just boggles the mind.
For someone young like you, Justin, I mean, this must, I guess you've never really used a post. Have you ever been into a post office?
I've never used the post office, but as I was saying to Chris, I'm a big fan of PostNet. Now that I'm living away from my parents and still under their wings somewhat, a lot of parcels come to and from Cape Town and Joburg, and especially when it isn't that easy to travel. So Chris, this is where it follows on. I could imagine the health of the courier industry is quite solid right now, given that people can't travel to and from, and goods and services still need to be moved.
Justin, you're 100% right. Let's be honest. We're in challenging times with the pandemic. Unfortunately, South Africa, we had a challenging economy before the pandemic, and we've seen an increase in volume across the whole of the industry, not only PostNet through the 450, but every logistics player has seen an increase in volume. If you look at e-commerce, and that's an important point for everyone to remember, the South African Post Office went after PostNet because we were the low-hanging fruit. If they got it right with us, they would implement this across the whole industry. That's why I say, thankfully, the South African Express Parcel Association is a strong group of individual businesses. And we're talking about some big brands. Everyone always mentions DHL and Aramex and FedEx and DSV, which are all international global companies, by the way, that are still investing in South Africa. We talk about foreign investment. We talk about creating jobs. Those good logistics players are doing that. It's a very strong industry. There's a lot of good businesses, big businesses, strong brands that employ a lot of good people. There's also the other side of the industry where there's a lot of smaller players that might do a bit of line haul or third party. They are individuals that create jobs working for a living. The other question we need to ask if we're consumers and we need choice is we should have a choice as a consumer, but those individuals also play an important role. How is a company like the South African Post Office, if they were to win the case, how are they going to manage this? How are they going to minister this? Are we going to see hundreds of people running around with clipboards going to thousands of hubs across the South Africa, counting how many parcels? It's going to be an absolute nightmare to manage and administer. And I think it's very sad. I think it's very sad. We must all look after our business. We must all work with the times. You know, we're in the year of 2021. We shouldn't be relying on legislation to actually be competitive. If the South African Post Office wants to compete in the industry, well, they must get their act together. They must get good leadership and they must make it happen and look after the consumer. And no one's perfect in the world of logistics. We have challenges, we have problems, but the consumer must be given choice. You know, and it's fantastic that many consumers have actually given us a support through this process. So yeah, Justin's point is 100% right. Have we seen an increase in volume in very challenging times? The answer to that question is yes. That means we must invest and we must make sure we're on top of our game going forward, not just PostNet, the whole industry.
Chris, I've got another question which is related to this, to do with cell phones. We have heard, and we see it often on social media, that courier companies delivering cell phones are targets for organized crime. Are you first of all, is that exaggerated or is it a real problem? And secondly, within PostNet, do you distribute cell phones as well? And do you have, if so, do you carry armed guards now to look after that?
The industry is, I'm afraid to say, the industry is under the spotlight with the amount of a lot more hijackings. We've seen a big increase in hijackings. It's a process there again. The industry is taking to the higher level. It's a concern. Obviously, it hurts the business. The consumer gets affected. The criminals have realized e-commerce is booming, so it's high value items. So we have to be very careful of that. With regarding moving of items of high value, the answer to that question, but there again, we have to be very clear with the consumer that if you're going to send a value of high item, it must be insured. It must be insured, and you've got to be very clear that it's insured, because unfortunately, we don't get it right every time. That's the industry. No one is perfect. So yes, the industry is being targeted with regards to hijacking and theft and crime at the moment.
So the answer then is just make damn sure that you take out insurance before you distribute anything. It's not inefficiency of the private sector, it's extreme efficiency of the criminal sector.
100%, 100%.
And that report was this, apologies, let's start that again. This thought leadership feature was made just for you by BrightRock, the first ever needs-matched life insurance that changes as your life changes. Well, we're staying with BrightRock for our final market report, and BrightRock believes that with every change in life comes opportunity, and the markets aren't any different. The daily movements in the markets mean change for us all, sometimes small, sometimes big. This daily market report is made just for you by BrightRock, the first ever needs-matched life insurance that changes as your life changes. Take us home, Justin.
The JSE All Share Index was a bloodbath today, close to 2% lower at 66,200. Naspers was down 3.5% to just over 3,000 Rand a share. The share is down now on a rolling 12-month basis. Tiger Brands up 4.5% to 216 Rand on the back of an upbeat trading statement, and Sibanye Stillwater down 3% to 63 Rand a share. In the currency markets, the Rand was slightly weaker against all the major currencies to 14 Rand 10 cents to the dollar, 19 Rand 80 to the pound, and 17.02 to the euro. Gold is steady at $1,824 an ounce. Brent crude is low at $67.80 a barrel, and the premier cryptocurrency will put you back 700,000 Rand a Bitcoin.
700,000.
10% lower than yesterday this time.
Elon Musk.
See, they're not using it in their Tesla on accepting payment in Bitcoin.
Well, I suppose Elon Musk gives and Elon Musk takes away when it comes to Bitcoin. Wow, that's a big smack. But we've been noticing that it is highly speculative, and I guess you've got to be careful if you're there. Just don't.
Yeah, I wouldn't hold our breath though. It could be 800,000 this time tomorrow.
Well, exactly. It wasn't long ago. It was 950,000.
Yeah.
This market report was made just for you by BrightRock, the first ever needs-matched life insurance that changes as your life changes. Jean-Pierre, before we go, we're not going to buy Steinhoff shares, I presume?
No, I think there's still too much uncertainty, and who knows if Bernhard and Brahm are successful. That puts a bit of a delay on the Pep & Co listing as well. I remind you that all these litigation settlements are not even on the balance sheet. They're all off balance sheet. So after this, then there's still the issue of the company still having a lot more debt than it does have assets. So no, not buying Stein.
But the good news, or a little for those desperate to take money out of their pocket, is that the markets are a lot lower. You can get things cheaper, not necessarily Naspers though, even at 3,000 Rand a share.
I would say Process, Alec. I think one can buy Process. Like I said, I'm concerned about Naspers in terms of the deal and how Naspers looks after the deal in terms of being effectively a very expensive control structure. But I think one can possibly consider buying Process at these levels.
We look forward to having you back with us same time, same place tomorrow from the BizNews team. Cheerio. You've been listening to the Power Hour, brought to you by the team at BizNews. Jean-Pierre, thanks, man. That was really, really well done. And fascinating interview with Bernhard, wasn't it? Shoo.
Yes. No. Is it possible to send me the court docs, Alec? I mean, it's not a private
Yes, of course I will. Yeah, no,
okay?
I'll in fact, I'll do it right now. I'll email it to you immediately.
Thank you.
For the email.
I have a bent of every now and then getting my hands on an interesting court case and reading through it, and it's quite fascinating quite often. And in the US, you can get it automatically via Bloomberg terminal, but our court system isn't linked, so it's actually quite difficult sometimes to get your hands on court documents.
All I've got is the affidavit, which I'll send to you right. Okay, I just want to make sure.
Thanks, yeah. So that would be the founding affidavit.
Your Gmail
is
or
fine.
Gmail account? Okay, it's there we go, on its way. Brilliant. Yeah, it's long, but you feel for the guys. I mean, they had a really good business. It was interesting what he said was that they didn't want the money. They actually are keen to fix what was broken, and they got sucked in that way.
Yes, there was the added benefit that I think all of these contractual claimants, whether Christo Visa, GT Ferreira, or the Tekkie Town vendors benefited from or thought they would benefit from, and that is that the shares that they got were outside of the South African Excon net. It was Netherlands shares. So I think for a lot of people that Steinhoff deals with, the moment they said, listen, you're not getting South African shares, you're getting Netherlands shares. It's listed on the DAX or in Frankfurt, part of the DAX, and you can sell these shares and the proceeds will be available offshore. I think that was a big carrot for all these parties that they had deals with. But within that carrot was the seed of its own destruction.
We forget that, don't we? We forget that it was 2017. It was Zuma and the Guptas, and it was a different country. And sometimes we forget how quickly we've changed. So, yes. Yeah, interesting. That's great context. Jean-Pierre, thanks, man. We'll catch up with you again soon. Thank you very much indeed.
Perfect. Thanks,
okay.
guys.
Cheers. Bye then.